Good morning, everybody. We'll be starting very shortly.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
You are.
Okay, thanks, Igor, and hello and welcome back, everyone. I haven't moved the chart where we left in the last session, so let's straight away start getting into the hourly chart setups for currencies, metals. We'll touch base with the indices, Dow Jones as well this session. And lastly, we'll be touching base with the cryptos, all four of them. Okay, so let me zoom in a bit. Before that, we need to understand what exactly has happened uh, earlier. I think this was the fifth wave. Or the minute degree. Remember, we are into the last wave, ABC, correct you? That's wave C here, and we're just waiting for the C wave to complete. And if you remember from the daily chart, these blue lines are the Fibonacci retracements, and we have now markets have now priced in 1.02 handle exactly. It's just pipped in below, but that is fine. That penetration was required. So if we are correct now, if you've done these things okay, it's just a matter of time before bulls are back in control very strongly. Okay, let's in, zoom out. Sorry. Fine. So what I'm going to do now is move this a bit on the right hand side. And this is the projected wave structure now. Okay, as suggested in the last session, if you are an aggressive trader, you might want to go long. Or sorry, we were already in the trade, but now 1.02 stop was triggered. So for the aggressive traders who want to capitalize right with this bullish divergence scenario, there you go, that bullish divergence. Today's low, the session low for now is around 1.0177. We can keep the stop around 1.0100 or 1.01. Yeah, it's better to keep it a bit uh, away from the noise that could possibly happen. So aggressive traders can look to trade in this fashion. Purely on the price action, purely on the anticipation of bullish reversal. Only one indicator is working here. Two indicators, sorry. One is the Fibonacci 61.8% touch, and second one is uh, bullish divergence across all three time frames. And that's why I'm mentioning it as an aggressive trade. Potential long again, 1.0200 handle. It's already 97. We can have the stop loss. So we are taking 100 points of risk, 100 pips of risk again. Target is open for us. In fact, if you want to go step by step, for long-term traders, it's going to be open. For short-term traders, it's going to be the first resistance comes around 1.0310, and the second one is around 0450. Those are the short-term resistances. And if you are, I mean, wanting to confirm the price action further, in a conservative way, that's actually the way to trade. You might want to at least wait until a break of 1.03 or 1.0450 and then wait for a pullback. So this is going to be a wave one impulse, lower degree, and then again we'll see, or we should rather see another path lower. This is where we would like to enter the conservative way of the for the price action confirmation way to trade. All right. I'm going to let's keep the path as it is so we can really follow and understand the story how the price action is unfolding, correct? Okay, let's touch base with the dollar index now. I think again, despite the fact that you get stopped out, but if you're doing things correctly and technically correct, it really doesn't impact your psychology or doesn't impact your confidence to deal with the price action because you are already prepared with the alternates as well. So what we do now is to move this slightly on the right side. Uh, the Fibonacci, if you were there in the last session, it was just missed. Now it's been taken 110.11. In fact, it was already taken out in the stop loss. We are now supposedly in with uh, uh, stop around 111. We take another 100 points of risk in the dollar index. So aggressive traders uh, get in on the short side just on the basis of this divergence scenario. That is an hourly chart. I'm going to bring up the 4 hours. You can see the divergence here as well. Top, previous top, and the current lower top, and then the daily chart is more crisp divergence scenario. Okay, so where you might want to you might lose a couple of trades on the aggressive side, but if you're confident on the on the counts that you're doing, the major levels have been tested and they've been achieved. Uh, Trend reversals should be on cards pretty much soon. So 110 handle. Let me mark it up here. Aggressive shots around 110. So let's keep this. Okay. And for those who are wanting further price action, this is what is expected to be. I mean, the first wave could just drop around that previous wave 4 of 1 lesser degree, around 109.14, and then lower degree wave 2. That is it would be the minute degree. It's going to be minute 1, minute 2, 3, 4, and 5, and finally it should be taking out 107, so a couple of 100 points lower from where we are trading right now, 300 points lower to be precise. All right, and this particular week could be, or early next week when we have that major event coming up of President Trump swearing in. That could be the trigger for the last wave, but at least price action should show us something within the next few hours. I think the first lower degree wave 4 of the sub-minute level is coming around 109.73. So that should be the first move. All right. We should be seeing a break below 109.77 in the next few hours, possibly when we are back in the New York session. That's where the price action should have taken already. That's what is expected to happen. I think one more interesting pattern, if you're keen to know what might have happened, is 1, 2, 3, 4, and 5. This could be a diagonal pattern. Yeah, let me just check where 133 has been penetrated. Yes, so so it has been penetrated, and it's a diagonal pattern. Diagonals are 5 waves, and each wave subdivides into 3 waves, possibly. So it is a diagonal pattern, a reversal as well, a reversal pattern as well. Maybe if it's not a diagonal, if I'm doing an alternate, or if I think about an alternate, there might be one more push if it's going to be an impulse. But I think it's more of a diagonal here. Not in the euro though. So it's this world of Elliott waves is precisely about 13 patterns and identifying them correctly. That's it. All right, let's move on to gold. Pound. Let's take it up. Let's take it up. Pound as well. Again, we'll just move this on the right hand side a bit, and the projected wave counts, the projected path, sorry, and the potential buy is now going to be. We are not recommending aggressive trades in pound. We've already done the two instruments, so we better wait for the price action, and rest remains the same. The 5 wave move is done. Let me check on the Fibonacci ratios as well. It cannot get better than that. See the Fibonacci 1.61, Fibonacci 0.61.8% extension uh, of the fifth wave, and prices are just beginning to cut loose on the north side from there. If I were to trade this chart extremely aggressively without without looking left or right or waiting for any other small wave to form, then I would definitely go long. But we rather stay a bit conservative and at least allow the price action to break above that resistance. In fact, I would say if even if you allow price action to break above 2175, which is the sub-minute wave, sub-minute wave or four resistance, it would be good. All right, and I definitely am sure that there will be divergence scenarios across all time frames. 1 hour, yes. 4 hour, we don't really have a divergence here, so it's better to stay a bit conservative. On the daily chart, again, we don't have a clear divergence, so it's better to wait again for the price action confirmation before we go long. On the daily chart as well, we are having a bearish, completely bearish candle right now in terms of the candlesticks. Okay, so let's wait for the signal and confirmation on pound. Okay, but we'll keep the laid out path like as it is, which would give us more confidence just in case price action moves there. Normally, it does move accordingly to the wave structure. Exceptional cases are okay when you're just around the turn. I mean, it's difficult to catch the turn always, and that's where you get tipped off for a couple of times maybe. But the larger degree wave structure is telling us a story that we are very close to a major turn across board. Okay, let's watch what gold has done in the past few hours while we were between the Sydney, New York, Sydney, Tokyo cross overlap. Sorry, it's good to have the wave counts. Okay, so this is what we are now. So we've done minor three. Okay, and now we are looking for a minor wave four decline, and the minor wave four decline is I mean if this is wave A, that is wave B or B somewhere here, one more high above the 2730, and then C. Okay, so if at all it is, but it's not a triangle here. I mean, wave B is possibly an ABC, or it's going to be an ABC X ABC complex structure. In any case, it would either reverse from here or from 2730. So let's have both in mind. Right now, we are trading around 2680. So we do not require to do anything or adjust anything in terms of the stop loss around the 2730. But we've got to see a continuous drop or break below the 2614 mark to confirm that gold is now turned lower. Gold has now turned lower towards 2500s. Let's also project the target. I mean, right now, let's take a simple target, simple three click, and that's close to 2443. Just to stay on the conservative side, I would like to take profits out around the 2500 as well, because if it is a flat structure, normally price action should come through the wave A. Now wave A began or terminated around the 2538, and just below that it's the minimum requirement for a flat to complete. So 2500 handle, even psychologically 2500 handle would be good to take profits off the desk. At this point in time, we would hold on to the short positions. Remember, we've taken shorts from 2660 70 zone already. And if you're joining just now, you can initiate positions again around the 26 uh, 80 zone as well. The stop loss has to go about 2730 for sure. All right, that's the story with for gold right now. Let's move on to Dow Jones. So during the weekend, I think Saturday, when we had that session, or that's the counts are already there. We've kept the counts, and did you see? No, did you notice that early last, the entire last week, we were not touching base. We're talking about a potential triangle in place, and let's get it done. Let's allow time for it to complete. This is what has happened now. Now, I mean, today's markets, our futures are already trading lower, and if you remember, 41 700 was what we were talking to be taken out, right? For this minute wave one to complete, all right? Now we are almost there, and there should be some kind of a diverging scenario as well. See that neat little divergence here. It's a very strong divergence. I mean, that previous low, the current low, and you see the RSI. I mean, it's a good bullish divergence. Now, this divergence is going to confuse quite a lot of traders who are still under the notion or under the belief system that where's that primary wave five? Oh, here, that this top is not yet primary wave five at or not just primary, but 4 different degrees. Uh, they are most traders are still thinking this is a correction. Okay, when it could be a correction, it is definitely a correction, but we are not going to be a very shallow corrective mode this time. It's going to be a much deeper corrective wave. When I say that the charts are saying that okay, it's not just one level wave 5, it's 4 levels of wave 5 matching or completing, sorry. That means the correction is also going to be that higher degree, you understand? So and that's why this corrective drop or the first wave of the corrective drop is still not enough to prove that the stock market is good to buy. All right. So if you understand what I'm saying, it's just a number one or primary, not primary, but minute. And the rally which is going to be followed is not to be bought. It's a bull trap. It's going to be a bull trap, this rally. I mean, if you allow me to do the trend line, let's try it out. Okay. Now this is a very typical and conservative, typical way to trade actually. I used to do that between 2008 and 2016 before really picking up or starting the Elliott wave model or practicing Elliott wave model, which we are still doing it. This is the conventional head and shoulder technique. See that that's an A, B, C, D, and then you draw the trend line, and now the price action has dropped through the trend neckline. That's the neckline, okay? What we call wave 4 of a lower degree here. It's called a conventional in the theory of head and shoulders. It's the neckline. So neckline, when taken out, most traders, conventional traders, would like to go short there. Unfortunately, people are not seeing this as a major top. It's just a correction. So most traders would say it's not a head and shoulder in the making, but it's actually a potential head and shoulder in the making. And if I project the right shoulder, if you allow me to do that, maybe a small still a small drop is left to exactly take out that low, uh, maybe a couple of hundred points around the market open today, and then a pullback. And this rally, you might want to watch this rally out. It would be very sharp and very steep. Ideally, it should be very sharp, very steep, and very fast. And most of the traders would be convinced to believe that the uptrend is back, the market is back on track towards a new high. And this is what psychologically happens in the mind of a trader. Uh, so what happens is you have bought here, and then prices drop, and then you lose out, and suddenly it turns very fast, very higher, very steep rise in within no time, and then around the right shoulder, that's where the psychology again sets in, and you start saying, most traders start saying to themselves that, okay, I lost in the previous slide, but I think I should capitalize now and then double up on the long side here. And that's what the most unfortunate thing to happen if you don't, or most of the traders, when they don't understand the wave theory, that is where the right shoulder kicks in, and boom, the bears are back in control, and then prices. I mean, when such a trend reversal is there, the head and shoulder on chart, it's not going to come back very soon. Okay, so just watch out. We will be very keen to take up a trade around the 40, 42, 43, 42, 700, 42, 900. Even I would not even want to wait until that, uh, because in terms of the risk reward ratio, the risk is around 1%. That's it. If you calculate from 43 to 45. Okay, so that's the story in the Dow Jones. A major downtrend is coming. It's just on the threshold. And now let's have a quick touch base with the coins. Okay, the wave two is taking its own time. So that's the second wave. Now, if it's a wave two, if it's a second wave, ABC, then ideally prices would stay above that 91,200 mark. So you actually don't need to worry about what's happening here. This, if it is wave two, it's going to stay above that low. Okay, so nothing to be done on the trading side. Just hold on to the long positions. It's a corrective wave two. It looks like a corrective wave two right now, and it should be picking up. But the stop loss should not be moved anything or any. I mean, most of the time, what happens here again is you either take the stop loss out completely, or you move it down. I think none of it should be done right now over here. Let it be around 90,000, and stay put on the long side, please. When we are back in the New York, we'll touch base again with what the trade structure, wave structure, or path looks like. I think we were already prepared for a corrective decline. Let me draw the path here. I think this was what was corrective decline we were expecting, but not as low as what it has done. So it's one larger degree corrective decline. I think I would change the path from here. That is wave one. This is wave two. If it is wave two, then we are going to see a wave three higher straight, and then wave four decline, and then wave five. All right. Upside targets for Bitcoin are intact for now around the 110 and yeah, 111, 124, 5, 123 mark. I think Ethereum's and Solana should also be following on the same track. Ethereum has done something different. It's completed the five-wave structure now. So this is a disturbing story, to be very honest. That five wave could be the first wave of a continued decline. So if you're on the long, if you've done nothing, then you better stay out right now. If you're already, most traders already, if you're long, your stop loss should be around 3,000 mark, and that's it. I mean, don't try to take the stop out, and don't try to please move your stop lower at this point in time. All right. I think the Solana chart would also be telling the same story. We'll touch base in details again. The New York Live. That's again the same old story like Ethereum. As we said, if the stop is taken out at 175, then we will have to relook or rethink the structure. So please stay with the stop tight at 175 for now. And remember that orange line earlier done on the daily chart. If it drops through the 161, the possibility remains in the fifth wave completely. If it does drop through the 161, that means no further long positions. It's going to be a sell-on rally structure for Solana after all. It will be interesting to see what Ripple has done. No, sir, I think Ripple it looks right on track. It's it's looking right on track. It's just a collective decline after the breakout. If you stand this line, the breakout, it's still in the buy zone of the consolidation. So Ripple seems to be much poised and determined to continue its rally uh, towards 3.7 and yeah, 3.7 precisely. All right. So and the bottom line for Ripple, I mean, we can have our protection there as well. Just a moment. Yeah, not wave E, but I think if you stay below wave C, that's the protective stop loss. From the first analysis session itself, we have called a protective stop loss to be just below A. That is technically correct, but it can be below wave C, not much difference here, right? And then when we see this continued rally, we'll move our risk again to a break even, or we'll move at the termination of wave E, right? But not the right time to move the stop loss, right? Okay. All right, sir. So I think I'll hand it over back to Igor. Igor, if there is anything else, you can let me know, or I'm done for the session now.
Awesome. Thank you very much, SPDas. Always appreciated and yeah, humbled by your analysis and knowledge. Uh, thank you very much.
Yeah, thanks very much, brother.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com.
So just a quick note here. You were just watching SPDas, Elliott Wave Theory Trader. There is another session coming up at 8 a.m. with IT Trader, and of course, a whole different perspective on the markets. So that's going to be very cool to watch. Love the fact that we can have multiple perspectives and be able to find the confluence points, points of divergence as well. And yeah, see you then, 8 a.m. Eastern Standard Time. It's going to be a blast. Looking forward to it. Thank you.